The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call on this one and to pass a compliment to you. I've taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. The material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the March 27th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. So let's go look at one of our tools. This is the tool I call the tail of the dog. You know, man's best friend can offer us great life lessons, whether you're a dog lover or not. Let's look at their secrets and let's learn. Number one, we should all learn to wag our tail more often than our tongue. Great listening skills are the key to being a great communicator, or better yet, a great leader. You know, sometimes a frustrated individual just needs someone to listen to them versus offering a solution. That's absolutely the case when it comes to the difference between masculine and feminine energy. But we will leave that for another day, folks. So, number one, we should all learn to wag our tail more often than our tongue. Number two, assemble your pack. You know, the most successful people surround themselves with a network of folks whose habits you would like rubbed off on you. How's your peer group out there? You know what? I've got an idea for many of you. If you've never tried the Tiger's Den, assemble your pack. There's a pack right in there right now. There's a pack of successful folks, traders, or what have you. Go ahead. The pack is assembled. Just go over to the homepage at TFNN.com. Give the Tiger's Den a try out there. Let's learn from our dogs. Number three, dogs are great at making us feel needed and valued. That's a trait we should pass on to coworkers, families, friends, children, everyone that you possibly can. Folks, number four, our canine friends also enjoy the simplest things in life. That means spend a moment to smell the flowers or simply put the window down the next time you drive your car and ride the wind, right? You always see dogs sticking their heads out the window. When was the last time you actually rolled down your window? Of course, maybe if you're in the north and it's freezing cold, maybe that's a whole different, maybe you're looking forward to going and rolling down your window. So let's begin our day. Let's learn from our friends out there, our dogs, and begin our day by wagging our tail, assembling our pack, making everyone in our life feel needed, and enjoy the simple things in life, folks. Thanks so much for joining us. Let's kick off these markets here. Right now, flat market, we've got the Dow futures trading down 2 points. They're trading out at 16,176. S&P futures off a half a point. They're trading out at 1842. NASDAQ futures off 3.5 points, trading out at 3569. Russell 2000 flat out here, trading at 1150. Not a lot of movement. Well, I got some movement in the British pound out here. Not much in the euro, not much in the Japanese yen. Goldilocks back $5 right now, trade out at $12.98. Silver down 8 pennies at $19.69. Our call-in number is 877-927-6648. Give us a call. Would love to hear from you. Happy to take your call out there. A quick peek around the globe. What do we have over in Germany right now? DAX is up 35 points as we speak, down about 0.3%. FTSE down a little bit more, well, down 38 points, similar in points, a little bit more as a percentage, about 0.6%. Asia last night, Nikkei finishing in the green out there, up 145 points. That was up 1% last night. The Hang Seng down 53.25%. The Shanghai off 0.8%, closing out at 2142, down 18 points. So, where do we begin? I put up this chart up here on my screen. Hopefully you're watching us on TigerTV, but if you're not, that's cool too. Maybe you're listening in on your mobile device at TFNN.mobi. We absolutely appreciate that. Maybe it's the radio you're listening. However you got here, we are appreciative of that. Let me describe to you what it is that I am looking at if you're not inside our Tiger's Den or watching us on Tiger TV. The top portion of the chart happens to be the Dow. So I'm going to take a look at the futures right now. Relatively flat out there. We'll go back to the futures here in just a moment. But I got a picture of the Dow out here. That's the top portion of the screen. The bottom portion of the screen is the Treasury Yield Index out here. What's interesting is if you take a look at now, the top portion of the screen, what I'm looking at is I'm just drawing a trend out here. And the trend that I'm taking a look at, the last two trends that we have right now. So I'm just simply coming from the swing point. Maybe you ask, hey, what's a swing point? It's where you see a reversal of fortune, a reversal of change in the marketplace out here. And if you go back to October 9th, the Dow had been moving down into that date, went ahead and reversed. That became a swing point out there. So I just simply go from the low of that session from a trend standpoint, and I just pick up the first retracement of any significance that took place. That was on December the 13th, December the 12th out here. So I just simply go ahead and connect to that line. Just simply draw a diagonal line up there. That was the trend. Now, interestingly enough, that trend was broken here on the date of January 23rd. Now, if you're watching the crosshair on my screen, what we can see is that the actual trend inside the Treasury yield was broken probably around the 9th of January out there. Again, let's take a look at this little subtlety with regard to what we're looking at on the screen out here. Because we're always looking for clues. And the question is, are we going to get a clue from here? So I'm going back to the swing point, the low on October the 9th. We're taking a look at the upper portion of my screen, just simply connecting the dots to the low that came in on December the 12th, establishes the uptrend out there that we can see was clearly broke right here on January 23rd. Now, if you're looking at the bottom of my screen and you're taking a look at the crosshair there, you can see that the Treasury yield broke that uptrend much earlier. The question is, was that a signal of things to come? Will that be a signal of things to come this time? Why is that important? Well, let's take a look at the current trend that we're in. Let's take a look at the February 5th swing point low. That, by the way, inside the Dow, 15,340.69. And you can see all I'm using here is really the last touch point out here, March the 14th, March the 17th out there. And you can see yesterday as the Dow was moving down, ran right into the trend. So the trend itself has not been broken. But the question is, just as in the past here, where the Treasury yield had broken through, and we see that it's broken through here over yesterday, really is when it really broke through this area, is that a sign of things to come? Well, I'll tell you what we're going to do. We're going to go ahead, we'll keep that in our charts to monitor out there, but I would say something like this. Something to think about. And we will think about it, and we'll continue to watch that. In any event, you can go ahead and you can probably map that on your charting system out there. But don't worry, just tune in here at TFNN. We'll go ahead and keep an eye on it. But there is something for us to be paying attention to. We do take a look at what's going on inside the metals market here right now. Speaking of trend lines, channel lines, and so forth, what we can see here is Goldilocks yesterday broke through the rising price channel out there. That's the black diagonal lines going across my screen. If we go from low to high out here, that means go from the low from December 31st all the way to that key reversal bearish engulfing session that was put in as gold made a high on March the 17th. The retracement level of 1311 has now been pierced. That was your 0.382 retracement. Does that mean it has to go to the 0.618 area? No, it doesn't have to do anything that it wants to do. Is it likely to go there now that it's broken the rising price channel? I'd have to say that's the next stop on this choo-choo train, unless we see. And if the choo-choo train here decides to turn around, guess what? we'll know because there will be a reversal signal. It is really plain and simple out there. So at this stage here, what we can say about Goldilocks, looks like about 1262 is the next target for it. If we go take a look at Hi-Ho Silver out here. I should have queued our man Al up to play our Lone Ranger tune out here, but we're not going to. What did silver do yesterday? You know, we were showing the day before where silver, and even yesterday when we were talking on the air out here, silver had still not busted through that beautiful Gartley buy pattern. And as I have said before, just because a pattern sets up, folks, that's what you're looking for. You put these things in advance. It doesn't mean you pull the trigger out there. You are just simply using, in my opinion, whatever patterns it is that you trade, you need a confirmation. You need a signal out there. And what does that mean? That means you really need to learn how to read the message of the markets. And the only message of the markets are left each day as you take a look at the Japanese candlestick charting out here. Did we get any kind of reversal signal as that 0.618 Gartley buy was being formed? No. And what happened? It's failed. Can you learn a lot from a failed pattern? Yes. What happens when you break through the 0.618 area? Well, just like we looked at in Goldilocks, you are likely to go ahead and move down to the 0.786 area. So if we go take a look at what that measurement is, we'll go from the low from December 31st all the way to the high out here on February 24th. That says 1946. Is next on its mark so far, the intra-session low out here. Now, does that mean it's going to stop there? No, of course not. 19, but it's the next target area for us to be paying attention to. That says a price level of $19.57. We'll see what happens when price gets down there. Now, what is silver done? Silver has also pierced the actual swing point low. That's the December 31st level. Once you get back into a swing point, volume or not, this is kind of irrelevant at this stage. Once you get back into a swing, that means if we were to see silver continue to close below the level of 1982, that's the high from December 31st. That sets up going all the way back down to the bottom of that swing point. So there's your two potential, well, there could be other outcomes as well. But here's their two likely outcomes as we speak right now. Move down to about 1946. Or move all the way down to 1872, and that is in the commodity complex out here. Let's go take a look at the see what light sweet crude is doing. It's trading up about $1.98 right now at 101.24. That means we have to move this A to B equals CD to the downside. Of course, this is not this is now not necessarily boding well. Well, I have a theory. We'll see if that theory comes to play out here. As I've said, it's going to take a little while for that theory to come to fruition. But what we see here right now is that the light sweet crude is above a B point, which is your March 20th area. So how do we use our patterns out here to draw the next potential Gartley sell pattern? Well, we first do that by starting off with the A to B equals CD pattern. I'll go ahead and draw that in here. 1-to-1 says 101.69. Now let's go ahead and take a look at retracements off of the high down to the low that we've seen here thus far. Looks to me like maybe at about the 102.63 level. We'll take a look at it when we get back here from this first breakout here. We'll see where the next sell pattern, potential sell pattern in light sweet crude could be setting up. 877-927-6648. Thanks so much for joining us, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went to break, we were taking a look here at the light sweet crude. It's trading up about a buck right now, trading out at 101.32, and it right now it's in the process of trying to form a potential Gartley buy pattern. That would complete at around the 102.38 area. If I blow that up on my screen out here, what you'll see is here's another pattern with some nice Fibonacci retracement and expansion numbers coming together. The retracement is the 0.618 retracement. That means we're coming from the swing point high. That's the candle session from March 3rd, that level 105.22, all the way down to the low that was put in here on March 17th out at 97.37. So now it's forming an A to B equals CD to the upside, or appears to be. The candle session, the day's not over, but at the moment, that's what it looks to be doing. It would make sense that the next logical price area for it to go ahead and run to around the 102.38 range. If it does that, you're going to see a 1.618 expansion of the B to C swing point as it forms that D level out here. You see inside every Gartley pattern, there's an A to B equals CD. In this case here, if you believe that the change in trend in light sweet crude was to the downside and you were ideally looking for a spot to get in, well, you've got a couple of different areas you could target. You could have targeted some type of retracement. Typically, you'd be looking at the 0.618 retracement level. But, of course, ideally, you'd like to see the 618 level be hit with an A to B equals CD. That would form your Gartley, in this case here, Gartley sell. Now, just like we took a look at in silver, just because it hits that level, that doesn't mean it's a sell pattern. That doesn't mean you jump in front of the freight train. That's unless you have the desire to try to sell the top tick out there, or at least go down to an intraday chart and try to find some type of reversal out there. So I'm not begrudging doing that. I'm just saying you need to have some strategy in place out here. If you're looking at it as more of a longer-term trade, then from a longer-term trade, you wait for the daily to go ahead and give you the signal out there. Because if this level fails, then it says that light sweet crude can move up to the 0.786 area. But that's what it looks like right now. The target, 102.38, will continue to keep an eye on that out here. Right now, futures are relatively quiet out here. Talk about yesterday, we had the running of the bulls. I think in Spanish, what's that called? Encierro or something? I believe that's something like that. I think that is for the running of the bulls out there. Of course, most of us are familiar with the visual of the bull run in Pamplona, Spain out there. Well, yesterday was a bull run, right? It was a bull run into a bear trap. Instead of running through the streets of Pamplona, it looked like they were running the bulls right into a bear cave out there, because it didn't take long for the bears to come out and begin selling. If we switch over into the, let's walk into this intraday chart. Give me a moment here to try to, where is it? Right back here. Let's walk into that intraday chart. One of the things that we looked at yesterday, where is it? There we go. Okay. Let's take, it's the ES Mini, the 30-minute chart on the ES Mini. And as we were looking at yesterday, we were taking a look at this rising price channel out here, because this one, really behaved well. If we take a look at that rising price channel that price broke out of, that was back at around 10:30 in the morning. That was on March 24th. We saw that price tried to move up into it back here around 10 o'clock in the morning on March 25th, and then yesterday, it's a 30-minute chart that we're looking at, tried to punch up into it. The last time was at 10 o'clock yesterday morning, and boy, it just simply acted as a significant resistance area, because we saw the bears show up for work right away and just continued to sell. If we take a look at where things are at right now, if we take a look at the A to B equals CD pattern on the 30-minute chart, our 8-point out here, that's going to be this high that came in at 10 o'clock in the morning. That was on March 21st. That's our 8-point. Our B point is down here at the low, came in at 1 o'clock in the afternoon. That was on March 24th. That's at a price level of 18.43, and our C point all the way up here. That was yesterday at 10 o'clock in the morning out there. The 1-to-1 A to B equals CD has 18.33.50 written all over it. At this stage here, I don't see any reason for that not to occur as we open up the gates to Pamplona here in the next 2 minutes out there, because I don't see any kind of a bullish reversal signal as we speak right now. So you'd have to say our best estimate for a target this morning inside the ES Mini is to push down into that 18.33 level. Of course, on a 30-minute chart out here, depends on what happens with that relative strength indicator as it pushes down there. Right now, what we do have is a price relative strength divergent pattern. So if, on the other hand, as the gates open, the bull run decides to overtake the bears, maybe the bears just simply aren't standing in the streets out there, we'll know that if we see a close as we get into the 10 a.m. session above the level of 18.44.25. That will be that'll be our confirmation of a price relative strength divergent pattern, and then we start taking a look at a retracement. And certainly, as a retracement level goes, you got to assume they're running into the bottom of that rising price channel. That, if price could get up there, that would be a sell area. 877-927-6648. Let's go see what's going to happen with the bulls, whether they're going to get stampeded today. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading down 7 points, trading out at 16,262. S&P off 2 points, trading at 1850. Composite down 7.5 points, trading out at 4165. Russell 2000 off 50 cents right now, trading out at 1154. We've got lead the charge the upside here. Signet Jewelers, SIG is the ticker symbol. They're up a nice 8% here this morning. Looks like they generated net income of $175 million versus $171 million from the prior year out here. Let me see, what was the net income? What did I give you? I gave you the net income. Let's take a look at the sales out here. Sales $1.56 billion versus $1.51. They're leading the charge the upside. You've got Baxter International, BAX as a ticker symbol. They're up 7% this morning, up $4.70 out here. Just trying to see what is driving the this stock here. Lululemon, LULU, that's up 5 0.5% this morning, up $2.69. Looks like maybe they beat their numbers out here. Let's see. They were their guide below estimates. Let me see here. What do they do? Net revenue. Looks like their Q4 revenue, $521 million versus $485. So they beat the top line there. I don't see the bottom line. SodaStream, SODA, is the ticker symbol. SodaStream is up $1 right now, up about 3%. Amgen, AMGN is up 54 cents out here. To the downside, we've got Google leading the charge. GOOG, it's off $17, about 1.5% right now. Qihu 360 Technologies, QIHU, is a ticker symbol. They're down about 5%, off $5. Baidu off 2%, off $4. You've got Tesla down $5 right now. We'll have to take a look at Tesla, see if we've gotten that island reversal out there inside of Tesla. Forgot to take a look at it yesterday. Baidu is off $4. You've got Biogen Bib, that's down about $5. Clovis Oncology off $3.40. Solar City down $2.38. Amazon off $4 as we speak right now. So the selling is right off of the bat here. We've got the Dow off 44 points. The S&P is off 6. Let's go take a look at Google. Let's go see what it is doing here. We'll take a look at its daily chart, see if we got an A to B equals CD to the downside here. That is forming. Let me see here. Come on, baby. There we go. So we'll take a look at Google now. This chart here, a little bit different than some of the charts that I've used in the past. I'll be integrating the eSignal trading application into my morning show out here. One of the tools that I completed yesterday was the ability to draw the A to B equals CD pattern out here. So kind of a cool way and maybe visually easy for you to be able to identify it. So when you're drawing an A to B equals CD pattern, in this case here, we're going to draw an A to B equals CD to the downside. The first thing we're doing is we're picking out the A point. That's in this case here because we're making an A to B equals CD down. We're going to pick out the top swing point. So as you can see out here, that's going to be this candle session from March the 7th. Now, let me go ahead and initiate the tool out here. So I'm going to go ahead and click that. It's going to be my A point. As I click that area, come on, it should work. There we go. There's my A point. Now the B point, you can see, makes a move down into a low out here that forms on March the 14th. That's where we see a move lower before it starts to retrace higher. That's our B point. I'm going to click on it. There's our B, and it goes ahead and it retraces up, makes a high out here on March the 19th. That becomes the C point of the A to B equals CD down. So there's our A, B equals CD out here. And what I've done is when you take a look at A to B equals CD, the 1-to-1 is going to form about 60% of the time. The other 40%, you're going to do more than a 1-to-1. Well, in the case of Google here, you can see it has made it down right now. It's below the 1 to 1.618 level. Your 1 to 2 level on an A to B equals CD to the downside here will take you down to the price level of 1103.08. You're trading at 1115.43 as we speak right now. If that level doesn't hold, we ought to see Google move down to the 1 to 2.618. A to B equals CD. That'll take us right into this swing point. This will form a 100% move of a move. That'll take you right back into the level from January 27th. You can see we have a little bit of a gap out here. That gap right now this morning has been closed. That was a gap that was created on the trading session of January 29th up to the trading session of January 30th. So that gap has now been closed. You're trading inside that swing point here from January 27th. It looks more likely that Google will go ahead and make a run for that swing point low and complete that 1 to 2.618 A to B equals CD. That's what's going on inside of Google. Let's go take a look at LinkedIn. Let's go see what LinkedIn is doing, see if we can draw a similar pattern out here. Take a look at the A to B equals CD in LinkedIn at the moment. Right now it's trading out at, well, it's got several. We try to go ahead and pull this back out here. So LinkedIn has been doing nothing but making A to B equals CD patterns to the downside. The first one inside of LinkedIn started all the way back here on the trading session of September the 11th, 2013. So if we go take a look at LinkedIn, let's go ahead and initiate that. We'll draw a number of the A to B. Whoops, I got a number of the A to B equals CD patterns. Here's our first one. Our A point on this is going to be back here on that trading session of September 11th. We'll mark that as our A. Our B point out here on the first one on the way down, that's going to be this swing point right here on September 23rd, 2013. There's our B. Makes a retracement out here. Come on, click. There we go. And the C point as it makes a retracement up on September 26th. There's the first A to B equals CD. In this case here, it made a 1 to 1.618 A to B equals CD before it went ahead and retraced up to form its next one. So let's go ahead and draw the next A to B equals CD pattern in here. Once you start making A to B equals CD patterns, you can continue making them, and that's certainly the case here inside of LinkedIn. So here's our next A point out here inside of Google. That happens to be the October 21st level. Come on, baby, work for me. Let me hold this down and initiate it again. There we go. That is right there on October 21st. There we go. That's the A point. The B point looks like right down here, the low on November 13th. That's what I would be using. That's our B. Click, click, click. Come on. Come on. Oh, don't do this to me. Well, that's why I'm using it in live action out here, so I can work out whatever kinks there might be, if any. And at this stage here, I'm not getting it to click. Oh, come on. There we go. There's our B point. And the C point makes a retracement up into December 10th, 2013. There's our C. 1-to-1, A to B equals CD. That completed here on the trading session of, looks like February 12th out there. Makes a move lower, almost completes a 1 to 1.272 before we see its next retracement. So now we're into the third A to B equals CD pattern. That's inside of LinkedIn. Let's go ahead and let's go map that one out. So that one here, beginning on the trading session here, our A point is going to be the February 26th level out here. That's our A point. Our B point is going to be a move down into March the 17th. So there's our B. We'll mark that. Come on. Click, click. There we go. And the C is a retracement up into March 20th out here. Looks like at about the 205 level. There is our C point. You can see this morning here, it's completing the 1-to-1 area. But you can see the move along that C to D leg is very strong. That says to me it's going to make more than a 1-to-1 A to B equals CD. So it looks like LinkedIn on its way down to the 172.51, perhaps a 163.28, which will be your 1 to 1.618 A to B equals CD to the downside for LinkedIn. Let's go back. Let's take a look at the Dow itself. Let's go take a look at its A to B equals CD patterns out here. See if we can identify what that might be. So as we take a look at the Dow, you really can't at this stage. There's no A to B equals CD to the downside out here, at least not one that I could draw on here. We just simply still have a consolidation. So you've got the Dow out at trade out at 16,215. Maybe we need to take a look at the NASDAQ composite instead. So let's go take a look at the NASDAQ composite. It's off 35 points here this morning. Let's go take a look at its A to B equals CD pattern to the downside. Let's draw that in here as we speak. So the A point in this is going to be your, and even this is going to be kind of a lame A to B equals CD to the downside. Don't even know, because the retracement came really all the way back up to the top out here. So that's not worth a drawn in my opinion out here. Let's see, the same thing with the Russell 2000. We just make sure as we take a look at that. Yeah, really the same thing as we take a look at the Russell 2000 out there. So let's go take a look at Priceline. Maybe Priceline, a little different story out here. Priceline is now down $25. Yeah, this has got an A to B equals CD for sure. So let's go do some price projections inside of Priceline. So we'll go ahead and get the AB equals CD tool out here. We're going to use the swing point high inside the Priceline. That is March the 6th out here. Looks like a price area right around the 1375 mark. Your B point on this is the move down into March 14th. That's at a level of about 1263 or so. That's your B. And your C is a retracement into the swing point high that it made out here on March the 21st. There's your C point. 1-to-1 A to B equals CD. That took place a couple of trading sessions ago. Again, we can see that move lower along that C to D level here. Stronger move on the C to D level than there is on the A to B leg out here. That says the next price projection is 1135.92. We can also see at 1135.92 we start to get into where we saw a little bit of a sign of strength, little gap up that took place here inside of Priceline. That was on the trading session of February 7th out there. So you're trading very close into that right now. If that level doesn't hold, This ought to make a 1 to 2 A to B equals CD down around the 10.93.17 area. Let's go check in on the currency pairs. Let's go see what's going on inside of the of our favorite currency pair. So you can see here on the ES Mini before we went to breakout here, we were identifying the A to B equals CD pattern on the 30-minute chart. We said, hey, looks like 1833 would be the next target area. Right now, you're trading out at 1834. Moving down, looks like we'll put up the other Rhodes momentum indicator signal. Looks like you still have that price relative strength divergent pattern potentially setting up here in the 30-minute chart for the ES Mini. Fairly wide-ranging bar coming in that D point. That is not how you like to see a D point formed or completed out here. But let's switch over and take a look and see what's going on inside of the currency complex right now. Let's take a look at our friend, the Euro Japanese yen. Let's look at the daily chart first, see if this is broken through its level of support. If it has, that would be extremely bearish out here. What the heck? There we go, down vertical. Where is it? So right here. So Euro Japanese yen, no, it has not. Something to think about, folks. So if we take a look at the Euro Japanese yen, you can see all that it's done as we speak here right now. We'll go take a look at an intraday chart as well. The Euro Japanese yen, big wide-ranging bar, breakout session that took place here on March the 6th. The low of that is 140.41. Prices come back to that level. This is now the third test of that area. A lot of time left in the trading session here, but it's really not confirming the move lower. The Euro Japanese yen, above everything else, is probably the best liquidity gauge out there with regard to the markets. And, when markets are moving lower and this thing is not going along for the ride out there, it really does have to make you just simply pause out here. It's telling you there's a disconnect, and until this currency pair becomes completely disconnected from the market, and it is not at this stage here, it's sending us a different message. Plain and simple. Just got to call them like I see them out here. And so you've got the Euro Japanese yen, as you can see, really just now it's not giving you any kind of bullish signal as we speak here today, but it certainly has not broken through the level of support. It's slightly below the 0.382 retracement, but that's not so much as important as its ability to hold 140.41 out there. It breaks below that, whole different story. Then all of a sudden the currency pair will go ahead and join along in the game. But this currency pair is just saying, folks, maybe that 1-to-1 A to B equals CD that we're looking at in a 30-minute chart, maybe that's really all she has at this stage. And maybe it's the bulls today that are trying to, they're just hiding. Maybe it's a little bit of a bear trap out there. That's at least what the currency pair is telling us on the daily chart. Let's go look at an intraday chart here and see what it is, see what the message is inside the currency pair. And then we'll go take a look at the VIX index as well. So there's your 1-to-1 inside your 30-minute chart out here. And let's take a look at the Euro Japanese yen. Let's look at the 120-minute chart. So the 120-minute chart has held this consolidation range. It's held it really well out here. Now, the beauty of this is as we were looking at that daily chart and we're looking at that breakout area, if it, in fact, fails, where is price going to move to, becomes pretty easy because this consolidation is such a nice consolidation, both at the highs as well as at the lows. This, in essence, is the third test down here, and thus far it is held. A move either topside or downside is going to be equal to or greater than the actual consolidation box. If we take a look at a move to the downside, that would go ahead and take the Euro Japanese yen down to about the 138, 139, looks like 139 even Steven. But at this stage here, it too has not broken through that level, meaning the consolidation low. So you're not getting the confirmation inside the Euro Japanese yen of a market that wants to just absolutely cascade south. At least not just yet. Let's go take a look at the VIX index. Let's go see what it is doing, because it's another great sign of liquidity in the marketplace. At least that is the way that Stevie's son here uses it. Right now it's trading at 1536, slightly above the 50-day exponential moving average, which is at 1487. Folks, pretty good chance it closes somewhere around 1487 today. Right now we've got the Dow off 51, S&P down 7. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow off 36 points right now. S&P down about 6 points. Composite off 21. Let's try to summarize here. Take a look at all the different patterns that seem to be in place here. Perhaps completing as we saw the initial push lower out the door. Number one. We've got on the 30-minute chart. We're just going to focus right now on the 30-minute chart here for the ES Mini. So number one, ahead of time, we drew in the A to B equals CD to the downside, which was really normal as we take a look at price on that C to D leg, and that gave us a price projection of 1833.50 out here. What it actually got down to was 1834. You got to love that. Half a tick. Okay, so it makes the 1-to-1 A to B equals CD. If I just take a look at this C to D leg, one of the tools that I've got built in on this software here is Basil Chapman's peak and wave counter. Now, it's all done numerically. That was the easiest way for me to do that here. So I'm just simply going to run that tool real quickly. We're just simply going to start from the C point. So if we do our little count down there, you can see that the first trough here, that was formed at 12:30 yesterday afternoon. Second one came in at 2:30 yesterday afternoon. The third one, or that C level, at about 4:30 yesterday afternoon. That was the third one. The fourth one, or that D level, that took place here at 9 o'clock this morning. And in this 9:30 session level here, you've got that fifth trough, or E. So you've got a 1-to-1 A to B equals CD completing here. At the same time, you've got the fifth trough down there. So now we've got two patterns, in essence, where it says, okay, time to be cautious with regard to a market that is, in this case here, completing patterns. Now, let's go ahead and let's put up the price relative strength. Let's put up one of the Rhodes momentum indicator signals out here for the Mini. What did we see take place yesterday at 10 o'clock? I probably should have had this chart up on the screen for us yesterday as well, because when it was making its high, what was it doing? It was making a price relative strength divergent pattern exactly at 10 o'clock. We had a number of different bearish reversal signals that were taking place at that time. What did it do? It's now moved lower into this price relative strength divergent pattern down here to the low that's come in at 10 o'clock. Now, unlike the pattern up here at the top that had a reversal signal, we don't have that here just yet, but it is doing its best to try to form that. This could actually turn into it could turn into a hammer candle, but it's got to get up to 1844 in the next 3.5 minutes. I don't know that it's going to do that. So if there's going to be a reversal signal, looks like the earliest it would come in, if it's going to come in at all, is at around the 10:30 session on the 30-minute chart out here. But what we do have is what's that? 1, 2. Now, three potential patterns out here that are completing in this 1834 range. So we'll see if the bulls can. Now, there's no bullish sign out here, so there's no bullish candle to know whether or not the bulls are trying to defend that territory. And then, of course, what we had was the Euro-Japanese yen. And if we go back to that, let me see, is that in this chart here? Yeah, if we go back to that at this stage here is still holding that consolidation level. So it has not broken through. Not really a bullish sign, but no bearish sign here with regard to trying to break through to the downside. So that's what we'll be looking for out here as we'll watch how trading occurs during the next hour. As far as let's see what else we have here. New York Stock Exchange, what is it doing as we speak? It's down 4 points, so it is the wider swath of the marketplace, and it is got the best behavior out here, only off 4 points. You've got slightly net advancing issues. You're up 54 on the net advancing issues today. It would be one heck of a turnaround in order for the bulls to truly take control. You'd need about 2,242 net advancing issues out there. So, folks, it is terrific Thursday. As always, thanks so much for joining me. Have a great day. I look forward to seeing you bright and early tomorrow morning, or in about 10 minutes. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.